We all have to start somewhere when it comes to investing. It took me a really long time just to save up my first $1,000 that I put into the stock market. When I began my investing experience, I did not know what I was doing. I really had to learn from reading books and listening to podcasts and watching YouTube videos about how to invest in the stock market. I was broke and I was going through a breakup, so I was heartbroken. But I knew that I needed to learn about money and learn how to invest in the stock market if I was ever going to reach my financial goals, if I was ever going to have a better life financially and not live paycheck to paycheck. I needed to invest into the stock market. Hello everyone, I am Colin and this is Harness Money. Go ahead right now and hit the like button and I will show you another picture of my dog Dexter. And now let's get into the topic of this video is investing your first $1,000. How do you invest that money into the stock market? It is very important that you start yourself off on the right foot, that you use that first $1,000 to propel you to the next milestone, the next 5,000, 10,000, 100,000, whatever your end goal is. Your first $1,000 in the stock market should start earning you some gains to give you momentum in order to be successful in your long-term endeavors. Before you put any money into the stock market, before you buy any stocks or any bonds or any ETFs, I would think about what is your long-term financial goals. Why are you doing this? Are you doing this to build cash flow? Are you doing this to grow a stock portfolio? What is your end goal financially? Because it matters. It matters how you are going to invest that money. If you're investing for cash flow, real estate might be a better investment option than the stock market. If you're going for more value dividend stocks, you may consider how you're putting money into those ETFs or those dividend stocks. If you're going for growth, which stocks are you going to choose for that? So really think about what is your end goal and define it. Get really specific. What financial number do you want to hit? Do you want to have $1 million in a portfolio, or do you just need $500,000 or even $100,000? What is your goal that you are trying to hit? Because when you have a concrete plan, it's easier to put in the steps in order to get there. So define that out, get very specific about what your end goal is. Even though this is your first $1,000 in the market, really think of your $1,000 as a long-term investment. It doesn't matter what age you are, if you are going towards retirement or if you are just starting in the workforce, that $1,000 is a lot of money, and you really want to think of investing that money as a long-term investment. Even if that long-term is only 5 years, that's 5 years that you are not going to spend this money. When this money goes into your investment account, whatever type of account, your stock account, your IRA, that money is going to be locked up for hopefully decades. Hopefully you can invest for 10 years, 20 years, 30 years down the line, so you really get the effect of compound interest. What type of investment account are you going to put this money into? It matters where you put this $1,000 because of the future. Hopefully this money grows for decades. So when you go to withdraw it, you want to pay the least amount of taxes as possible, because that will give you more money to do the things that you want to with this money. Maybe give to charity, maybe give to your family, maybe just go on a long trip, or buy a new car, a new house, or something like that. But you want to really maximize all of the dollars that you are putting into this account. So you have a couple decisions to make before you put this money into the stock market. Are you going to put this money into a health savings account, or a Roth IRA, or a traditional IRA, or just a simple stock brokerage account? One of my favorites is the health savings account because it has the very best tax benefits. You get to deduct the money that you put into your health savings account off of your income, and then you can invest that money into the market and it grows tax-free for your lifetime, and you can withdraw that money at any time to pay for health-related costs tax-free. You don't have to pay tax on any of the money you withdraw as long as you pay for health-related items with that money. That is a great place that I think people should start. It is also my idea of a health emergency fund. You're building up funds for your future self in case you ever have something medically go wrong that you need that money. The other account that I love is the Roth IRA, and this has a limit of how much you can put into that account every single year. The idea behind a Roth is that you put money into a Roth today and you pay the tax today, but then in the future, your future self can withdraw that money tax-free. That is a great benefit if your money sits in an account and it becomes very valuable over decades. If you amass hundreds of thousands of dollars in that account, then you can withdraw that money tax-free. You may also consider putting your money into just a regular old stock brokerage account, a Robinhood account, a public account, a Fidelity account. There's all kinds of regular stock brokerage accounts out there that are waiting for you to invest your money. People put money into these accounts because it's very easy to do and it's very flexible. You can buy stocks easily and then you can withdraw those stocks easily. But you have to keep in mind that if you invest your money into a traditional stock brokerage account, that whenever you go to sell your investments, you have to pay tax. You have to pay, hopefully, long-term capital gains on those investments. So there is a cost with putting money into the traditional stock brokerage account, but you also have a little bit more flexibility than some of the other accounts. You can use margin or leverage. Basically, you can use debt against your stock brokerage account to invest into whatever you want in the future, maybe a home renovation, maybe a vacation, and basically use it like a loan. But rather than going to the bank, you're going to your own stock brokerage account. So that's a really big benefit. So before you even put $1 into the stock market, decide where is the best place that you should invest this $1,000, and then how are you going to expand that over time? Maybe you start with a health savings account today, then when you have filled up that bucket, you move on to the Roth IRA, and then when you filled up that bucket, then you move on to the regular traditional stock brokerage account. Now that you have decided which type of account that you are going to invest into, it's time to decide where are you going to invest your money. And when I say where, I'm talking about which platform, which brokerage account are you going to use to invest this money, because you have to think back to the long-term investing. Whatever platform you choose, Robinhood, Webull, Fidelity, Bank of America, you're going to be using this platform for a long time, for hopefully decades. So you want to think very carefully about where you invest this money, because it's not easy to start out at one brokerage and then transfer all of that money to another brokerage or another platform. And all of these platforms are not created equal. I feel like some of the older big banks, their software is a little bit clunkier, a little bit harder to use than the newer app platforms where you can invest your money, like Robinhood or Webull or Public. My two favorites, this is just me, you don't have to do what I do, but this is what I like. I like Robinhood and I like M1 Finance. I feel like those are the two easiest platforms as far as software, as far as investing and buying equities, but everybody has their opinions about these different companies, so choose carefully. Also think about whether or not the platform offers margin, or if they offer a line of credit against your stock portfolio, and then what percentage are they going to charge you. It's just like a credit card. When you shop for a credit card, you want to look at what percentage are they charging you on the debt that you accrue through using that product, because they're not all made equal. Some are more expensive than others, some are less expensive than others, but Robinhood and M1 Finance both have pretty low interest rates if you do decide to borrow money for whatever you want, for a vacation, for a home renovation, or if you do end up buying more stocks, buying more equities into the platform. The other item is, does this platform offer options trading? Some platforms offer options tradings, others do not. What about crypto? Do you plan on investing in crypto? Does that platform sell crypto, or does it give you the option to buy into Bitcoin? These are all questions that you need to answer before you choose your platform, because you are going to be there for a long time and you want to be happy and you want to be easy to invest more money. You want it to be as easy as possible to continue investing into that platform. Another item is, does that platform offer recurring investments? Can you set up automatic deposits into that account? It's best to choose a certain time every single month or every single quarter to invest money into the market. Dollar cost averaging has proven more successful than just putting your money in whenever you have that funds, but it depends on the person. I usually invest when I receive my paycheck. So I get 24 paychecks per year from my work, and I invest every time I get that money. But I do it manually. You may want to do it automatically without even thinking it on a weekly or monthly or yearly basis. So you really have to look at what features do all these platforms have and which one meets your needs, because you're going to be with this platform for a long time. Remember, we're doing this for long-term investing, long-term capital gain. So you want to keep this platform for the foreseeable future. Now it's time for the good stuff. If you have $1,000 in your bank account right now, where should you be investing it? I like to split the money up into two buckets. I want you to be successful. I want you to have solid wins in your win column. And so I would, number one, invest $500 into an ETF, an exchange traded fund. It's diversified. There are a lot of equities in an ETF, and you're very likely to get long-term capital gains from an ETF if you just buy and hold and let it run over the next 10, 20 years. Some ETFs that I like are the VIT, Vanguard Total Stock Market Index, BUG, the Growth Index, and VGT, which is the Vanguard Information Technology. That's my favorite ETF, is the Vanguard Information Technology, because I am bullish on technology being bigger tomorrow than it is today, and just really having a strong few decades ahead of it. But I would select a ETF that I really believed in was going to be a lot bigger tomorrow than it is today. That could be batteries, that could be clean energy, that could be growth stocks. Whatever you think is going to be great once you've done your research, buy $500 worth of an index fund. Now, number two, the other $500, I would select one stock. I like to concentrate my stock purchases when I make them, and so I think that you should just invest in one really good, solid stock that you believe in. That could be a big stock like Amazon or Apple or General Motors or Tesla, whatever it is that you think is going to be really powerful, really successful in the future. Put $500 to it. But think very carefully about which stock that is. Are you going for a dividend stock like a Costco or a Walmart, or are you going for a faster growing company, maybe a GoDaddy, maybe a Zendesk, maybe Dutch Brothers Coffee, those are much smaller, growing faster? Or do you want the big technology companies like Apple or Amazon that are going to do well in the future but are really expensive today? That is what you have to answer, where you should be researching what it is that you believe in and what lines up with your goals and your values. What kind of world do you want to see in the future? Invest in that. Now that you have chosen what you're going to put your $1,000 into, it's important to have a plan. Remember that in the beginning we set up these long-term goals, these long-term financial goals that we want to accomplish through our lifetime. So you have to have a plan to actually get there. You can't just invest your $1,000 and expect that $1,000 to become $1 million without putting a little gas in the tank. You have to keep adding money to your portfolio in order for the compounding to really snowball, in order for it to become a rolling snowball that collects massive amounts of money down the line. So that means that you want to have a plan to continue to invest. You're going to invest every single month $5 or $10 or $1,000 or $10,000, whatever you have. You just want to make sure that you are consistently investing. Even if you decide that you want to do it manually, that you manually want to go into your phone and type in that I want 25 shares of Apple today, click buy, you want to do that on a consistent basis. Make sure that you have a plan and that you set up a schedule for yourself to invest into the market. A lot of people believe that dollar cost averaging is the way to go, that having a set schedule to do it every month or every quarter at a specific time without you even thinking about it, making it automatic is the best way to go, that you will have more long-term success over that. I believe in the beginning you should be doing that. For the first $1,000 to $10,000, I would recommend dollar cost averaging. Once you get more advanced, when you get more comfortable, when you've done more research, when you've seen a little bit more success, then take it to the next level and start buying individual stocks. When you see a dip in the market, put more money in, or when you find a company that you believe may be undervalued or is just a really big growth opportunity, then invest that money into the market on your own timetable. But for now, go ahead and set up that recurring investment into the market. Thank you for watching this video. Don't forget to hit the like